You're also watching the SM Business Report right here on the Afia Business Morning. Ebonyi State has proposed an 884.8 billion naira budget for 2026, more than double its 2025 figure. The spending plan, tagged Budget of Actualisation and Hope, allocates an unprecedented 84% to capital projects, from roads and infrastructure to a major new industrial push. A standout item in the budget is the state's plan to establish a 150 billion naira state-owned cement factory, a move authorities say will be self-financing and capable of transforming the state's industrial landscape. This raises important questions. Can Ebonyi realistically finance and execute such an ambitious plan? Is the aggressive tilt towards capital spending sustainable, given the state's revenue profile and existing obligations? And what does this shift mean for economic growth, social services, and investor confidence in the state? Joining me now on the program virtually to answer this is Mr. Rowland Ndudim, a financial analyst. You're welcome on the program, Mr. Rowland.
Morning. Thank you for having me.
So we saw the budget proposal by the governor of Ebonyi State, the jump from 396 billion naira, should I say over 300 billion naira that was approved for 2025 budget to 884 billion naira, over 90% increase from 2025 budget. I'd like to get your thoughts on this. Would you say this is realistic?
Well, personally, I have some reservations about the quantum leap. We're talking about close to 100% quantum leap in budget allocation based on the projection. When you look at growth of countries, or you look at 10%, 20%, maybe 30%, a leap in projection, which is fair. But to now jump 100%, it's quite bullish and daring. And there are a lot of reservations along the path in trying to achieve a huge budget expenditure outlay like this. Number one, yes, the governor said that they are allocating 83% towards capital, which is fine and good. But then, the bulk of the funding will come from loans, which will be tied to the federal allocations. And so, when you're looking at borrowing, the question now is the quantum leap, the quantum funds you'll be borrowing, which will be tied, either you're collecting the loans from local or international funding. Now, when you look at the major project, which is the star project the governor tends to achieve, which is the building of a cement factory. He has allocated 150 billion. And 150 billion is about $100 million. And so the question now is, cement business, very fine and good. It will open up an area. Ebonyi State has huge limestone deposits. Very good idea. But my snag is, businesses of this nature, it's better run by private firms. They're more efficient, they can source adequate capital, and there's stability in terms of governance compared to state governments, where the entire lifespan is 8 years and the next person comes in. And so the question about continuity of the project is a major factor. So these are the issues. But the good thing about it is an expenditure of such outlay is going to open up that entire locality. Where you have limestone deposits is somewhere around Nkalago access, where the former Nkalago cement factory used to be. I hope that is the location. And so it is expected that that entire area will see a lot of massive development in that axis. I happen to be into Obajana Cement in Kogi State. And it's a massive investment down there, and entire development reach those areas, from road networks to housing to provision of so many basic facilities. So this is what this project tends to attract in that area, and that's the beauty.
Okay, yeah, go ahead.
So, but my major concern is the continuity of the state government to start and complete this project, and not just complete it. Will the price be attractive? This is another question. Cement business is not an all-commerce affair. It's being run by monopolies and cartels. And so the right mix from governance to management to execution to deployment of funds has to be top-notch so that we don't end up with abandoned projects or projects whose assets become state capital. I started my banking career in Ebonyi State. Samegu earmarked to build a 5-star hotel. After 8 years, the 5-star hotel is abandoned. He also planned to build a trade center. The trade center was abandoned. Next to Elechi's government, Elechi planned to build a new secretariat. He built brick and mortar. I don't know if they finally moved it. Though some ministries have moved in there, but I can't say the present state. The next governor, who is Umahi, who is now the minister, built an airport. Right now, the airport is not functional. It's a dormant asset. So these are the fears. Would this cement factory, will it be completed? If it's completed, will it be efficient and effective? So these are the issues that needs to be addressed.
All right, Mr. Rowland, when we look at the budget, you'd see that 84% or over 80%, if I would say that, was budgeted for capital and infrastructure. Now, with social sectors, from what you're saying, with social sectors such as health, education, do you see them suffering, or would they remain adequately funded?
Well, one thing about budget projects like this, there's always an opportunity cost, and the main attention of the governor. So for a project of this nature, it's going to be given all the attention. And so some other projects will not really suffer, but will experience decline in experience paucity of funds. The attention will not be there. That's the point. If you read out the governor's the budget, there were emphasis on school renovation, the renovation of the Nkalaki hatchery, which is good, because the previous administration did a lot of brick and mortar. So what I'm looking at the governor is looking at starting a different focus. It's not going to be more of roads and roads and roads. And so I do hope and pray more funds will be allocated to education and health so that there's a balance. But with a project of this magnitude, which is the cement factory, there will be opportunity costs. That's a given.
Now, you said a lot of things about the cement factory earlier. You said it's better it is run by private sectors. So are you saying that the cement factory cannot deliver on its promise?
No, not that. The point is, cement business is privately run and run efficiently. We have seen the outcome of governments in businesses. What governments should have done is, provide equity, which is the land and the mineral resource. Then what the government now do is provide site and services along those areas. Good roads, good lights, housing, accommodations in that axis. Cement business is a standalone business. Whoever is going to establish it is going to create its own facility. It's not depending on power. They're going to generate power on its own. They're going to provide services on its own. They're not going to depend on government for anything. And so these are areas where the government can come in and say, okay, we're providing the land. We're going to provide basic services along the road. We're talking about heavy-duty vehicles that will come into those areas, and we need to apply on roads. So that road itself has to be provided by the government. Water has to be provided by the government. So these are services the government should provide along those areas. and the private sector will come in to take up the running of the plant. At worst, I would have appreciated it. Okay, the government provides 20% or 30% equity contribution. It makes more sense so that the government can deploy those funds to education, housing, rural electrification, the roads connecting those areas. You see, and that road along that area, that's the Nkalago axis, if that is where the cement factory is to be sited, also links Enugu State. So there should be something like something that has to spread development in that axis. That's the beauty.
So are you saying the cement factory shouldn't be state-owned?
It can be state. The state can own an equity, 10, 20, 10%, 30%. It's fine. But 100% ownership is not going to be run efficiently.
Why do you say so?
Okay, now the question now is access to capital. Now, when the initial the funds comes in, what happens after the next administration in 8 years' time? What happens to the next government? Is it going to be the priority of the government to run the cement factory? A clear case is the airport the previous administration built. It's not functional. And this administration does not have it as its priority to deploy funds towards those areas. So these are the issues financiers look at. Okay, I want to fund this. Will this take off? What is the possibility that this thing will be successful in 8 years' time? So these are the issues when it comes to funding, more especially government-owned businesses. The bankers are looking at continuity of the project.
All right, Mr. Rowland, this budget has been described as a historic budget in Ebonyi State. Now, from what you've seen in over 2 years in office of the Governor Nwifuru, can Ebonyi realistically finance and execute such an ambitious budget and plan?
Well, I looked at the cost of cement factories. They have different categories: small, medium, and large scale. The small scale is about $5 million, medium scale between 10 to 20, large scale $90 million upwards. What they're proposing is $100 million. Fine and good. They're paying from their federal allocation. It's going to be taken, the repayment will come from the federal allocation. No problem about funding. The question now is, when the cash comes in, is it going to be fully deployed? This is my concern. I worked in Ebonyi State in 2001. We funded the building of a 5-star hotel. It was abandoned. That's the question. The trade center that was built by Samegu has been abandoned. These are the issues. The airport that was built by David Umahi is being completed, but it is not efficient. It's a dormant asset. So these are my fears. Cement business is privately run and run successfully. The lifespan of this government is maximum 8 years. Will the next administration have this at its priority to run it very well? These are the issues. Cement factory, very good, beautiful idea. It will open up the entire area. The cement will be sited. Very good, long term. It will employ a lot of people, generate taxes and other forms of levies for the state. Very good. But the question is consistency and continuity of government to run it efficiently. That's my issue.
Talking about consistency and continuity, big budgets like this demand stronger governance. Will there be proper project management, would you say, oversight and delivery or risk, waste and corruption? To avoid these things you said, what should the government put in place to make sure these things do not happen?
Well, projects like this, when a governor is interested in it, government officials tend to because the governor has an interest, they tend to like drop the ball and overlook so many things. The clear case, in example, which we have in Ebonyi State, where the smart schools, we will see what happened with the Sujimoto scandal. And so these are the fears where government officials are supposed to serve as guardrails will drop the ball, and you will now hear of issues of misappropriation of funds. So these are clear cases that have been happening times and times again. So that's just my fear. But for the project itself, it's a good idea. The question now is, if the government has done his proposal, all his plans, laid it out before the State House of Assembly to look at it objectively and scrutinize it very, very well and see that, okay, the right funding, the right management, the right access, everything is, all the dots are dotted. I don't have a problem with it.
So if this finally happens and comes to fruition, do you think it will reduce dependence on federal locations in Ebonyi State?
Not immediately. No, not immediately. You see, there will be a time lag. There will be a time lag. But it's a function of the actual construction and completion of the factory and the price it is going to sell its product if it's going to be competitive. That's the issue. It's not just building a plant, but raising the capital to go into production and your final product is competitive because it's a cartel. You have Dangote cement, you have Boa cement, you're all going to compete. So the question is the right management to run the factory efficiently and effectively and compete to get a market share. So that at the end of the day, the company makes a profit and now pays its taxes and levies to the state. So it's a whole lot. And mind you, if it is completed, that factory will also attract other businesses, which has a trickle-down effect. So we are hoping that the right things are done so that 10 to 15 years' time, it's a success and it can now start generating revenues to the state. But in terms of the state becoming independent, no, it's going to take years. It's not the magic wand. It's not.
All right. Thank you so much, Mr. Rowland, for joining us on the program today.
Thank you very much.
And that's as much we can take on the Eastern Business Report today. Thank you for staying with us on the Afia Business Morning. Until I see you tomorrow for another edition of the Afia Business Morning, I am Marvelous Apuamagan. Bye for now.